Good morning, and welcome to another edition of Roadhouse Last Call, the morning show brought to you by Enda Ockington and myself, Hell Spells. Bender,
Good morning.
how you doing, Bender?
Oh, not too bad.
You got you a pick 'em up truck.
Yeah. Yes, I did. I bought a truck that we needed a ranch truck. We need a farm truck. We need a truck that can pull stuff around and that I don't have to. I have a truck, but it's
It's not that truck.
it's not that truck, and I don't want to beat the shit out of it.
And so you know what you have to do next, right?
What do I have to do next?
You're going to have to grow out the mullet. If you're going to
No.
truck,
No.
yes, Bender, yes. If you own a truck like that, you must put a mullet. You must.
This is not true.
This is true. This is fact.
No, you're generalizing. You're
No,
No,
this is
you-
redneck handbook. It's been written, Bender. It's
maybe
been written.
rednecks in a different part of the country do the mullet thing.
It did. The necks don't get any more red than what they do in Texas.
Well, that's not going to happen. But I do think if I just put some flags on the stacks and drive down the highway, probably piss off a few people.
Absolutely. Look, if you're not going to grow one out, we're going to have to get you one of those wigs so you can sport it when you're rolling around. Get you one of those. Now that I think about it, maybe I want one too. Never thought of wearing a toupee, but I might actually sport a. Yeah. Mine's racing now.
Well, I'll let you think on that.
All right, so today's a big day, Bender. We get FOMC.
Mm-hmm.
So ahead of FOMC, we got retail numbers, which were poor, which is what they've been gunning for, is to kind of snuff out the consumer. And so they're starting to get that, and the market reaction was bullish to retail sales being toilet-ish. Or if nothing else, there being a slowdown involved with that. So we have to start understanding how some of these data points are coming in, and not necessarily what they mean, but what the market reaction is. And we always have to keep in the back of our mind that the economy and the market are two different species. They are not the same in any capacity. The market has a tendency to price things in well ahead of whatever an economy or economic condition is going to be. The theory still remains that the market is a forward-looking instrument. So when bad news becomes good, you have to understand that some of this is like, okay, this is what the market wanted in order to feel good. Let's see if it can sustain, especially when we have this binary event here in a few hours with the Fed coming up. So, in other news, Tesla began its layoffs. They're looking to cut about 10% of their salaried staff. This is not the first time that Elon has chosen to take a Spartan diet. The first time he did it, they came out clean as a rose. This is going to be his second attempt to go ahead and force a Spartan diet. And Shanghai is also said to be operating now at 100% capacity. So we'll see, if there's any more headlines or buzz regarding that. Chinese retail sales industrial output showed an improvement in the economy as they're looking to lift more lockdowns in Shanghai. So that's going to be interesting. And I'd say mainly interesting because it will have an impact on crude. It will have an impact there. So we have to watch and see what that is. It's like there is a very, very interesting game that's being played between supply and demand when it comes to crude, and having our eyes on that and seeing the market reaction to those numbers and to these types of data points are going to be very interesting, because when you have China that's been basically handcuffed and you have crude where it is, and demand being where it is and supply being where it is, if China really reopens and starts chugging along, that's gonna put a further strain on supply. Again, something that we have to keep our eyes on over there. Another data point that came through: Americans now have more equity in their homes than at any point in history, and there has been no shortage of home equity lines being taken out on that equity, which kind of, in a lot of ways, rings a bell back to 2008. That was a major problem then. I have no idea how this money is being positioned. I have no idea how many of these rates are variable. I have no idea of any of those factors that led into the issue in 2008, but people are tapping that equity. And that it can be a recipe for disaster. So we have that going for us. ECB is holding an emergency meeting to address their bond sell-off. There's a press conference soon thereafter. The markets are looking for them to stop the bleeding and be supportive in some capacity. We'll see how that plays out. We also get crude oil inventories today. That number will be on watch pretty heavily. And we also have, going into tomorrow data, we have the Bank of England's rate decision, and we have Philly Fed Manufacturing Index as far as our data. So there's still a lot of data in addition to FOMC today. The only thing I want to hold on to and kind of reiterate, like a very, very strong point on this, the moves can be dramatic, they can be harsh, they can be severe, and lately they have a tendency to reverse 24 hours after whatever it is. Not saying that that's going to happen. I'm just kind of pointing out that we have closed the day being up or down after these binary events, and the next day is a complete opposite. So sometimes we get over exuberant when we get these big donkey candles one way or the other, and we position that way, only to wake up the next morning, feeling it right in the face. So having the guardrails on is still a good idea, regardless of which way the market shakes. There's not a good, clean narrative out there. And I can't say that enough. There's not a clean narrative for bull out there. And the narrative for bear is so toxic and so negative that even that narrative is, to an extent, being overdone. Where we end up, nobody knows. But what we can do is continue to be disciplined, maintain the guardrails, try to be smart, and live in the moment. Bender, what levels do you have for us? Because this is a big day. You have to have some levels that are so wide, it's ridiculous.
I could give really wide levels, which would kind of be the same ones I gave yesterday. I'm going to give you a couple that I think, as long as we are in this sort of 37, call it 3770 to 3800. I'll give you a few to look at or to keep an eye on as we, if we start getting those bigger moves, around the the data release or the as the announcements come out. On watch today for me, this 3730 to 3750 to act as support. If 3730 gives, I look for 3709, 3700. To the upside, obviously, we want to get over 3800, but then watch 3820. That's the level that I'll be looking at. If we get over 3800, be watching 3820. I'll put the chart out just as an update to the chart, that I've been posting the last 2 days. We held that previous trendline resistance that has become support that goes way back. We held that, and we're still kind of sitting just above it. And the reason I put out, and I gave that range of 38 or 3730 to 3750 is because you've got two trend lines. You have current trend line support and previous trend line resistance, and they come together in a little wedge right in that price range. So I think that that area to hold, I think, is key. And as we know, like yesterday they overshot it, just a little bit, and then pulled it right back up. So I think that becomes important.
So when you're looking at these levels that you're putting out there, that gap that we made the other day,
Yeah, 38.80.
yeah, how within range do you think we can be of that?
Well, I mean, we go back the last couple of weeks, and how many days have we gone 100 up to come all the way back down, or 100 down to come all the way back up? We know that being 100 points below it, that's striking distance. If it starts to move, I mean, you know what I mean. We're seeing some pretty big swings. So I it's definitely not out of question.
Okay, very good. Do you have a plan or a bias or a thought coming into today? It's like when you're looking at these levels.
Man, I'm gonna keep playing as long as it lets me. If we get a pull early and we come down towards that 37, call it 37.35, I might take a shot there. But everything that I'm going to be doing is going to be playing for taking positions, whether short or long, taking positions where I can have a pretty tight stop, so something doesn't get away from me, at least until all the information is out in the open.
Mm-hmm. No, that makes
So
sense.
I'm just going to stay away from playing in the middle of levels, kind of that no man's land territory, because that's where you tend to get faked out.
Yeah, absolutely. Absolutely.
Right now we're over the 10, the 20, and the 50 on the 60-minute. The 10 is 37.59. The 20 is 37.51. And the 50 is 37.65. So they're all within, 14. And we're above all of them right now. So let's see if 37.51, if we get a pullback early, look for that to hold. That's the 20, 37.51. And if that gives up, then you look for that 37.30.
Okay. Very good. Mr. Stockington, what do you have for us today?
Hello, morning. We're not such a crazy gap, which is always feels like a little gift in the morning. So I'm putting some charts here in the room. If you're with us here on Discord, you can check some of those out. I've got Apple. Basically, everything on the list going in today was an inside bar. Again, I like those. Just means yesterday the price compressed harder than the day before. So Apple drifted a little bit outside of the levels, but I did post the chart there with longer term fib at 134.05, as well as this wedge it slightly broke above. So that looks interesting. Coin still within this wedge. I liked the flow that we saw yesterday on coin as far as a potential move to the upside. So I'm gonna be taking it kind of like everything that Bender was going through there. Don't want to get faked out. Don't want to get caught on the wrong side going into this meeting. But take it slow. See if coin can break above this 52.45 level I have, or if it's going to go to the downside, 50.3. Again, I've got some additional levels in the charts posted in the rooms, which actually kind of were good bounce areas pre-market as well, at least from the downside. Moderna has been getting bear flow for at least the past week or so. So I'll be looking, that looks like a bear flag to me on the hourly chart that I posted in there. So be looking to see if it reacts to 120.55 and then upstart slightly above this 34.65 level I had. So I'll see if we get some kind of retest. But one of the things that kind of imprinted in my brain from a different Fed day that you mentioned, Hal, was just I'm not touching anything unless it's like the most picture perfect flow, chart pattern, everything. Otherwise, it's just going to be kind of like a sit on hands until that kind of stuff comes out.
Mhm. Yeah, it's like it really feels over the past month or so, um, everything has turned up into a hurry up and wait. Hurry up and wait. Okay, another data point, another speaker, another something, another data point. Everything is become a hurry up and wait. And then trying to figure out what the positioning is going into whatever that data point is or conversation, but whatever it may be, it is hurry up and wait. And I don't know that a lot of people have really traded that environment to where everything becomes so data driven and data dependent, and even the language coming from the Fed is so important. And it's not even so the language, it's like the interpretation of that language becomes absolutely crucial, because you can interpret something in one moment, but then it takes a whole nother meaning, hours, days, weeks later. And it's difficult when you start looking at these things, really trying to parse through it. That's why you have to use, the levels that Bender is putting out, and some of the concepts that Stockington is putting out there as far as trying to figure out what the setup is going into these events. Absolutely critical to being able to have success in a market like this. A couple other things that I was looking at, and much like you, Stockington, I'm looking at some of these Bitcoin names. That 20,000 level has been the hold of all holds and the ad of all ads for the crypto markets for, it seems like, quite a while now. That 20,000 level on Bitcoin is important. We got to bounce. Now it comes back to, are we going to see call flow coming back into coin, coming into Mister, coming into Mara, Riot? Are we going to see that activity? And if we are, then odds are I'm going to go ahead and try to take advantage of that. I'm also going to be watching semis pretty closely at the same time. We got some decent covering yesterday, couple of little baby sneaker little pieces of calls coming in. Semis are going to be on very close watch to me as far as flow going into the meeting and coming back out the other side. The other sector that I think that we actually saw something that was fairly legitimate, we had 3 alerts in the same sector yesterday, which we have not had in a while. We had UAL, we had Southwest Airlines, and we had, I believe, no, we didn't get an alert on DAL, but we did get some activity there. So that travel leisure sector is the one that everybody is pointing to as far as we may be getting a slowdown in spending in retail. However, people are shifting their money more to travel and leisure coming out of the pandemic and the lockdown. People want to have experiences. They don't want to buy shit. They want to have experiences. They want to live life. That's the narrative. That's where a lot of analysts are saying that the money is going to flow to. These stocks are also way down and have taken a beating with everything else over the last couple of weeks. Southwest was pushing 50 not too long ago. It's now trading under 40. And we got that alpha gold on Southwest yesterday. DAL is just, Delta's an incredible company. They find a way to win no matter what. That should be another one. UAL, same thing. So we'll be watching that closely. Hilton is another name that usually gets strong flow when there's going to be a bounce in that sector. So Hilton will be on watch to see what comes in on Hilton. That's going to be where my eyes are kind of trained in a little bit as far as seeing how exactly the money's going to shit, if it is indeed going to rotate or we're going to continue with a broad market sell. So those are those thoughts. Outside of that, I don't have a whole lot else. We're all sitting here waiting for the Fed. We have England that's going to make their rate decision tomorrow. There's a lot of speculation and conversation that they're going to come out and try to, and I put this in quotation marks, shock the system with a 3/4 rate increase. Let's see what they do. We can see exactly how the market reacted initially to those retail numbers. Let's see if we get follow through. Let's also watch Walmart. Let's watch that flow. Same with Best Buy. Let's watch that flow. Let's watch the flow that is coming through on some of these retail names. There's a lot of conversation as far as their inventories being overrun with pandemic-related items. See how much of all this is actually priced in. And I think that that's a question that we have to continue to ask ourselves. When we see flow that is bearish on a sector that's already been beat down, that means that it has not been priced in. Regardless of what we believe fundamentally in our own minds, the flow in the money and how it moves and where it moves to is going to tell us exactly what's going on, not how we feel. And again, a lot of this conversation, a lot of what I just said, it's much easier to say than to do and act upon. But we have to keep it somewhere in the back of our minds. Bender, do you have anything else for us?
Nothing else from me.
Stockington, do you have anything else for us? That dude just peeled off. He probably went back to bed. Good nap time over there. The market opens. All right, guys. Anybody in the room? Anybody have anything that they want to add, put out there? Any setups that you think that are legit that we should keep our eyes peeled to? Very good. All right, we have 19 minutes until open. Get comfortable, get your mind right, and we'll see you soon.